urge each one of you to be a little crisp here. Mightily, banking stocks perking up in trade, obviously on expectation that money will be funded in. You don't essentially subscribe to that view.
Not at all. Complete waste of hard-earned taxpayer money for two reasons. A, the quantity of money that you can spare for that is grossly insufficient if the NPAs are what they say they are. Two, you're addressing only the symptom, not the cause of the disease. What the government should focus on is in improving growth, kick-starting growth in a bigger way, and that would do far more to address the NPAs and address the bank balance sheet issues than anything else they can do by way of recapitalization.
Toss it to the banker in the panel. Sanjay, what do you think they can do as far as bank recap? That's a big story. We all know about the NPA mess. The government needs to fix it, short term, medium term. It needs to get fixed. What can this budget do?
If it's a bold reform, I think you can create kind of a top kind of a thing, which is kind of a government level asset reconstruction company, take on the assets. But again, it requires budgetary support, so that's one way. The other way is you give out the recap to different banks to help them take the losses and move on. But I think that you need to get better accountability at the bank levels. You need to have much better underwriting standards in the future. But if you don't do this, I don't know how you get the growth going, because government can spend that much. The banks have to step in with that 20-year money, right? Otherwise, how do you get project finance going? So look, I think a bold reform would be create something central and significant, and not so bold would be do a recap, whatever the number is.
So what will also be bold is to sell stakes in public sector banks. That has been the stated position. Why has it not happened? 2014, they intended to go down to 52%. Not a single stake has been really sold.
No, I can't say why it is not sold. But the fact is that I think there is not one solution. I think what Maithili is saying is the bigger picture. Without growth, nothing will happen. So that is important. But at the same time, I think the two-pronged strategy will be necessary. One is in terms of recapitalization. I do believe it is necessary. And they have to move towards that. Also unlock a lot of value by divestment and bringing it down to 52%. A lot of money will be found there itself, so you don't have to go anywhere to the taxpayer in that sense. And the second part is also, like we were discussing yesterday, create a mechanism which will allow banks to offload bad debts to instruments like IDF and so on, without getting into trouble by taking a haircut and so on. So you clean up their balance sheets to that extent, recapitalize them, and of course work towards higher growth rates so that the economy...
But privatization is not a complete answer. Citi was a private bank, is a private bank, had to be bailed out by US taxpayers. Let's not forget that.
Sure, 16 minutes to the budget speech. I want to get closing...
privatization.
Sure, 16 minutes to the budget speech. I want to get closing comments from Mukesh here and Swami as well. Mukesh, on divestment, do you expect the government to bite the bullet, not look at divestment traditionally, look at strategic sale? And the one thing that you're watching out for as far as taxes are concerned, we all know corporate taxes is going to come out, is going to come down. One thing that you're looking for in taxes?
I think on divestment, clearly the government is going to set up a special group, or likely to set it up, which will look into divestment in a far more strategic manner than how it has looked at in the past. As far as taxation is concerned, I have repeatedly said that I don't expect much in the legislative agenda, but from an administrative viewpoint, if the government accelerates the pace at which it has been addressing issue on the administration front and lays out a roadmap for implementation of expert committee report, I think it would be a big service to the nation.
Swami, very quickly in 20 seconds, privatization is a word out of this government's dictionary?
Absolutely, as far as any major things are concerned. Do they have enough guts to privatize scooters, India? Maybe. In our, a real baby little step, they are capable of. But even then, Jayant Sinha said a year ago, strategic sales, not a chew about which are the specific companies. So you can see the kind of pace. I would just say, in terms of the big picture, everybody is talking about it's the power of government to do this and to do that. If you ask me, I am really frightened with the international scene. So Arvind Subramanian in the Economic Service says we must be prepared for a very major change. Right. So I would just say to everybody who thinks this is the budget, watch out, there may be a supplementary budget later in the year.
All right, keep your expectations moderated. There always is a supplementary budget later in the year. I'm going to throw it back to Nikunj and Aisha. We've got our power-packed markets plan up. We're going to build up to the big budget speech in 14 minutes from now. Over to you, Nikunj and Aisha.
And thanks a lot, Sandeep. Yes, it's, today we may be discussing the budget event in totality, but trust me, it's really all about global cues. And that brings me to Adrian Mowat. Adrian, Frankly, today it's all about budget. Tomorrow we may discuss budget. But do you think in the short term it's all about global cues? And do you see more pain from here for emerging markets as a category irrespective of the budget?
Look, the next week is a very important inflection point for India. If we have a disappointing budget and the Reserve Bank doesn't start to cut policy rates more, then I think that'll be a negative message for investors. Now, as we go into this budget, expectations are quite low. Investors are nervous moving in. They've been selling the market down. So it is possible that this budget could surprise positively. Then if we got follow through from the RBI, maybe cutting policy rates by 50 basis points, then
Right.
I think Indian equities...
Adrian, let me also get in Ramesh Damani here. Ramesh, good morning to you. Thank you for joining us. Ramesh, from a market standpoint, what would you call as a good budget, great budget and a poor budget?
Well, I think the standard would be what Google uses, do no evil. I think if they avoid messing around with the long-term capital gains, market is extraordinarily nervous about that particular provision coming in there, and they do something positive in terms of bank recap, PSU disinvestment. I think the market will be very happy with that. If they tweak the long-term capital gains, I'm afraid the sentiment will be soured.
Shankar, markets are extraordinarily nervous about the tax regime, change in tax structure. But what is the nervousness all about? Markets are down because foreigners are selling, and foreigners currently are protected by the so-called treaty agreement. So I wonder what is the nervousness all about, because frankly, Shankar, in last 1 year, no one has made money and no one should worry about paying more taxes.
Yeah, well, that's true. But the real worry is that in the last year, the only source of capital to the markets have been domestic investors. So bear that in mind. While, yeah, the FIIs have a shield against their taxation, domestic investors have supplied capital to this market, and you end up penalizing that very set of investors. I think that is very messed up thinking. Seriously, sometimes I sit and think about the policy makers, that who sits and dreams up all this nonsense? I mean, you have this MAT policy. The previous government came up with this Vodafone retro tax thing. This government might come up with a long-term capital gains. I mean, who's driving all this? Aren't people sitting and thinking that, guys, this is a capital-starved economy. You need to keep the red carpet out rather than the red tape in, which was what was promised. It's pretty much the opposite that we are seeing right now. It's a complete negation of the premise on which this government came to power. That is the real story here. It is not about one tax change here or one tax change there. It is simply that you promised the markets or the economy or business or voters something, and you are going against that. And it is not good thinking that you end up penalizing providers of capital. I mean, just look at it from that perspective.
Sunil Singhania, what is your biggest fear aside of LTCG, which is the dreaded acronym today? Okay, we will get to Sunil in just a bit. Rashesh, the same question to you. Is it going to be back to bond market volatility, back to global cues, if indeed there is no mention of LTCG today?
I think then it will be a big relief, because I think almost all investors have now formed this apprehension that LTCG in some form or the other may come back. And as I think everybody else has been saying, it's not the economic value of LTCG, it is the sentiment that will affect. Because we need, I've always believed that ease of doing business, half of that is related to stable tax regime. So once we have a stable, forward-looking, investment-friendly, whether it's friendly for Indian investors or foreign investors, that is half of ease of doing business in India. So if you get that, I think it will be a good thing. But yeah, I think the next 3 to 6 months is going to be global cues. And unfortunately, on that count, things don't look good, because FIIs will sell. They're very overweight India. Yeah. And it's not just the equity markets. They're selling bond markets. They're selling Indian rupee also.
There is what could be called as global risk aversion right now. And Sunil Singhania, the next question is coming your way. What if today the capital tax structure is just tinkered with? Instead of 1 year, that becomes 3 years. As of now, we are discussing a binary event. What if the announcement is more like middle of the path?
See, as I mentioned earlier, Nikunj, pre-budget, most of the, sort of negatives have already been discussed. And as you mentioned, to some extent, people have started discounting the fact that there's going to be some tinkering as far as the capital gain structure is concerned, specifically on the long-term side. So if it happens to be lower or slightly better than what the street is expected, obviously it is going to be positive. However, having said that, I think more the direction is important rather than the tinkering of long-term structure. Our view is that there is a need for incentives to be given for long-term investment as far as equity is concerned in this country, because if a country is to grow further from the $2 trillion economy, there has to be incentivization of domestic savings being channelized into equities. And we are very confident that the government and the Ministry of Finance realizes it, and there should not be too much of a concern relating to the tinkering of capital gain structure as we speak.
Well, certainly everybody's hoping for that. Ramesh, let me come to you. We've talked about the fisc, we've talked about capital gains. Banks is that other big one. They are holding out well today. Aside of the 70,000 odd crores of capital infusion for PSBs or maybe ARC's automatic FDI, what else can the budget really do to help this sector, which is the pillar of the markets, as they say?
I mean, I think you've laid out the case. They need to do a recap. The bank board appointment today has been, fairly decent. So the market will look at the the tenacity of the program laid out in the budget in terms of the freedom they have to operate, the capital structure. So that, we look at the fine print before we decide what they can do. But just to add a quick point out there, all global markets are in a funk, and that's why India is in a funk. But if you remember, globally interest rates are negative, whereas the S&P 500 in America yields 3.1%. Global interest rates are negative, but India is growing at 7%. So I think when people take a deep breath, they'll realize that there is value in equity markets, and hopefully they'll come back and participate in it. And I mean that globally, whether it's in the Dow or on the Wall Street.
Okay, I'm just going to very quickly mark some stocks, and this is last 10 minutes. This is typical pre-budget price adjustment. PSU banks, the big ones, they are up, with the assumption that there is a fat commitment, a large number is coming for PSU banks recapitalization. State Bank of India is the biggest gainer on the Nifty, followed by PNB, and then you've got Bank of Baroda. Now there is a fear that import duty on crude would come in, custom duty, and that is having impact on oil refining stocks. IOC, HPCL, BPCL, they are lying at the bottom of the pyramid, especially BPCL, which currently is one of the biggest loser on the Nifty. Sunil Singhania, if the government commitment towards bank recapitalization is large, anything above 30 to 35,000 crore, will that make case for large PSU banks to rally in the medium term?
See, Nikunj, we have seen obviously a very, very stressful December quarter. And as we speak, most banks have guided for an equally challenging, March quarter. And to that extent, I think the markets have been, sort of discounting what we are seeing. At the same time, we have seen a couple of large deals which have come in, one over the weekend, which gives credence to the view that, yes, there are some stressed assets, but at a price there are buyers or there is value in some of these stressed assets. Along with it, if the capitalization number goes up, then the fear of the banks not being able to survive, that will basically start to subside, and a lot of these banks will start to get traded as a going concern rather than on a breakup value kind of a thing. So I think at the margin we do need capitalization of some of the weaker banks. I think more than the capitalization, some of the other, sort of events which have taken place, which Rameshji mentioned, the bank board, and maybe, the direction which the government also lays down in terms of the future as far as consolidation. We have a Gyan Sangam coming up 1 week after the budget. I think all this put together would have to be viewed rather than just a number of capitalization, whether it's 30,000 or 40,000, because what is positive for one might not be positive for the other. So I think we'll have to look at the...
Yeah, but it's important to note, look at the way these PSB stocks are rallying right now. SBI is your biggest move on the Nifty, followed by a PNB, and then comes a BOB. In fact, as I speak, all of the Nifty PSU bank composites are all holding out in the green. SBI is rallying a good 5% as we speak. There could be a scrappage policy in the CV as well as the passenger vehicle segment as well. So that's going to be positive for all commercial vehicle manufacturers and PV OEMs as well as ancillaries. So I want to just check in on what Ashok Leyland, Bharat Forge, Eicher, Maruti, etc. are currently doing in trade. Having said that, there may be an anti-pollution tax or a cess against diesel vehicles. We've seen how heavily some of the state governments have actually come down or clamped down on some of the diesel car manufacturers. So look out for these. And like Nikunj pointed out, look out for what ONGC does. There may be a 10% excise duty on a cigarette across lens. So look out for ITC, Godfrey Phillips.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNow Live. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.